Look, I get this question all the time, and it drives me absolutely crazy because it reveals a fundamental misunderstanding of what gold is and what's happening to the dollar. Gold keeps going up. It's hitting new all-time highs. And people are asking me, is it too late to buy? Should I wait for a pullback? Have I missed the boat? And I'm sitting here thinking, you're asking the wrong question entirely. Gold isn't going up. The dollar's going down. Gold is just sitting there doing what it's always done, which is maintain its purchasing power, while fiat currencies get destroyed by central banks and governments that can't stop printing money and spending money they don't have. When you ask if it's too late to buy gold, what you're really asking is it too late to protect myself from the systematic debasement of the currency? And the answer to that question is absolutely not. It's never too late. In fact, it's more urgent now than ever before. Here's what's really going on, and nobody in the mainstream financial media wants to talk about this because they're too busy cheerleading for stocks and telling you to buy the dip and invest in index funds for the long term. The Federal Reserve has destroyed the dollar. They've printed trillions of dollars out of thin air. The M2 money supply has exploded. The government is running deficits of $2 trillion a year with no end in sight. We have $35 trillion in national debt and unfunded liabilities for Social Security and Medicare that add another $100 trillion to the real debt picture. There is no mathematically possible way to pay this debt back in dollars that have anything close to their current purchasing power. The only way out is inflation. The government is going to print money, and the Fed is going to monetize the debt, and the dollar is going to lose value, and gold is going to continue to reflect that reality. When gold was $400 an ounce, people asked me the same question. Is it too late to buy gold? When it was $800 an ounce, same question. When it broke 1,000, when it hit 1,500, when it went to 2,000, every single time people said, it's gone up so much, surely it's too expensive now. I should wait for it to come back down. And you know what happened? It kept going higher because the fundamental
driver of gold's price in dollar terms is the debasement of the dollar. And that debasement has not stopped. It has accelerated. Every year the Fed prints more money. Every year the government borrows more. Every year the debt gets bigger. Every year the dollar buys less. And every year gold maintains its purchasing power. Let me explain this in terms that should be obvious to anyone who thinks about it for more
than 5 seconds. In 1970, an ounce of gold cost $35. Today it costs over $2,000. Did gold change? No. Gold is the same element it was in 1970, the same element it was in 1870, the same element it's been. For all of human history, what changed is the dollar. The dollar has been debased by over 98% since we went off the gold standard completely in 1971. That's what you're measuring when you see gold going up. In dollar terms, you're not measuring gold to getting more valuable. You're measuring the dollar becoming less valuable. And that process is going to continue because the incentives that drive monetary debasement, the political incentives to spend and borrow and print rather than tax and cut spending and live within our means, those incentives are stronger than ever. The people who ask if it's too late to buy gold are thinking about it like a stock. They're thinking, oh, it's gone up a lot. Maybe I should wait for a correction. Maybe there's going to be a better entry point. That's speculation mindset. That's trading mindset. Gold is not a speculation. It's insurance. It's a store of value. It's a way to preserve your purchasing power in an environment where the currency is being systematically destroyed. When you buy gold, you're not betting that gold is going to go up. You're protecting yourself against the certainty that the dollar is going to go down, and the dollar is absolutely going to continue going down because there is no political will to do what would be necessary to preserve its value, which would be balanced budgets, spending cuts, tax increases, allowing a severe recession to clear out all the malinvestment and excess debt that's been built up over decades of easy money. Look at what central banks are doing. Central banks around the world are buying gold at record levels. China's buying gold. Russia is buying gold. Turkey, India, Poland, these countries are accumulating gold as fast as they can because they understand that the dollar's days as the unquestioned reserve currency are numbered. They're diversifying their reserves. They're preparing for a world where you can't just hold unlimited amounts of U.S. Treasury bonds and assume they're going to maintain their value. When central banks are buying something aggressively, that's usually a pretty good sign that you should be buying it too. They have access to better information than you do, and they're not sentimental about their decisions. They're making cold calculations about how to preserve the value of their nation's wealth, and they're choosing gold. But the average American investor, what are they doing? They're sitting in stocks at all-time highs, priced at valuations that are absolutely insane by any historical measure. Gold has gone up too much at 2,000 something an ounce, when gold is going to 5,000, going to 10,000, possibly going much higher than that as this monetary crisis unfolds. I've been warning about this for years. I was telling people to buy gold in the early 2000s when it was under $300 an ounce, and people thought I was crazy. I was holding bonds that are going to get destroyed when inflation picks up again, or when the bond market loses confidence in the government's ability to service the debt. They're speculating in crypto, believing the hype that Bitcoin is digital gold when Bitcoin is nothing like gold. It's a speculative asset with no intrinsic value that requires electricity and internet infrastructure to function and could be regulated out of existence. And they're asking me if warning about the housing bubble and the coming financial crisis in 2006 and 2007, when everyone was saying housing never goes down and the subprime problems were contained. I was right then, and I'm right now. The difference is that the situation today is much more dangerous than it was before 2008 because the debt levels are exponentially higher. The Fed's balance sheet is massive. The distortions in the economy are greater, and there's less room for policy maneuvering. In 2008, the Fed could cut rates to zero and do QE and backstop the financial system. Today, inflation is already a problem, so their ability to use those tools is limited. They're trapped. And when they inevitably choose inflation over deflation, when they restart the money printer because something breaks or the economy weakens or the debt service becomes unsustainable, gold is going to explode higher. Anyone seriously believe that's going to happen? Does anyone think the politicians are going to cut Social Security and Medicare? Does anyone think the Fed is going to hold rates high enough to actually kill inflation, even if it means a deep recession and a stock market crash? Of course not. They're going to do what they always do, which is take the easy path, the inflationary path, the path that destroys savers and benefits debtors and transfers wealth from the productive sectors of the economy to the financial sector and the government. Here's another way to think about whether it's too late to buy gold. Gold right now is still only a tiny fraction of most people's portfolios. The average American has the vast majority of their wealth in their home and their 401 kilobits, which is mostly stocks and bonds. Gold might be 2%, 3% if they own any at all. That's insane. In an environment where the
currency is being debased, where government debt is out of control, where the Fed is trapped between inflation and deflation with no good options, where geopolitical tensions are rising, and the dollar's reserve status is being questioned, you should have a significant allocation to gold. I'm talking 10%, 20%, possibly more, depending on your situation and risk tolerance. And most people have almost nothing. So even if gold has gone up a lot in recent years, the reallocation that needs to happen, the shift out of overvalued paper assets and into real money, that hasn't occurred yet on any meaningful scale. When that shift happens, when the broader investing public wakes up to what's going on, when people start to lose confidence in the dollar and in government promises and in the Fed's ability to manage the economy, you're going to see a rush into gold that makes the current price increase look like nothing. We're talking about potentially $10 trillion or more of wealth looking for safety, looking for something that can't be printed or debased or defaulted on, and there's not that much gold available for purchase. Most of the gold that exists is either in central bank vaults or in jewelry or in the hands of people who understand its value and aren't selling. The amount of gold available for investment is relatively small. And if even a fraction of the money in stocks and bonds tries to move into gold, the price is going to go parabolic. People also need to understand that gold's performance looks even better when you account for real inflation, not the phony CPI numbers the government puts out. Yeah, gold has gone from 1,500 to 2,000 plus in the last few years. That's a nice gain. But what's happened to your cost of living in that same time? What are you paying for groceries, for gas, for insurance, for healthcare, for housing? Everything costs substantially more. So in real purchasing power terms, gold hasn't gone up nearly as much as it looks like in nominal dollar terms. It's just kept pace with or slightly ahead of the real inflation that's destroying everyone's purchasing power. And that's exactly what gold is supposed to do. It's supposed to preserve your wealth, not necessarily make you rich, although in a crisis, it can do that too if you bought early enough. The other thing people worry about is volatility. They see gold pull back 5 or 10%, and they panic and think they should have waited. But volatility is part of the deal with any asset. Gold has pullbacks, it has corrections. In the short term, it can be influenced by dollar strength or weakness, by real interest rates, by trader positioning, by all kinds of technical factors. But over the long term, over years and decades, gold has maintained its purchasing power while every fiat currency has lost value. The dollar has lost 98% of its value against gold since 1971. That's the trend that matters. The short-term wiggles are just noise. And let me address the argument that gold doesn't pay dividends or interest, so you're losing out on yield. First of all, what yield? Interest rates on savings accounts and short-term bonds are still below the real inflation rate, so you're losing purchasing power even with the yield. Second, stocks might pay dividends, but those dividend yields are historically low right now, and you're taking on enormous valuation risk holding stocks at these levels. Third, the purpose of gold is not to generate income, it's to preserve capital. It's insurance against monetary chaos and government mismanagement and economic crisis. You don't complain that your homeowner's insurance doesn't pay dividends. You're glad you have it if your house burns down. What you need to do is stop thinking about gold as an investment that you're trying to time and start thinking about it as a core holding that protects you from the systematic risks in the financial system. Buy gold now. Buy it regularly, dollar cost average if you're worried about short-term volatility, but get exposure and get it in physical form, not ETFs, not mining stocks, physical gold coins in bars that you control. Because when the crisis comes, and it is coming, you want to own the actual metal, not a paper claim on metal that may or may not exist and that could be frozen or restricted or seized by governments or financial institutions that are desperate to prevent capital flight. The run on gold hasn't even started yet. We're still in the early innings of this crisis. Most people are still asleep. They still believe the Fed has everything under control. They still think the economy is fine because the stock market is up. They still trust the government's inflation numbers. They haven't figured out yet that the entire system is built on a foundation of debt and money printing that is mathematically unsustainable. When they figure it out, when the confidence breaks, when the rush for the exits begins, Gold is going to be one of the few safe havens that actually works. I've been proven right about gold over and over again over the course of my career. When I was telling people to buy gold at $300 an ounce, the mainstream economists were laughing at me. They said gold was a barbarous relic, that it had no place in a modern portfolio, that you should just buy stocks and bonds and trust the Fed. Where are those people now? Gold has gone up sevenfold since then. It's outperformed the stock market on a real return basis when you adjust for inflation. It's preserved wealth while currencies have been destroyed. And it's going to continue to do that because nothing has fundamentally changed. The debt is higher, the deficits are bigger, the Fed is more trapped, and the eventual crisis is going to be worse. So is it too late to buy gold? That's like asking in 1975 if it was too late to buy gold when it had already gone from $35 to $200. It proceeded to go to $850 by 1980. Or asking in 2005 if it was too late when it had gone from 250 to 500. It proceeded to go to 1900 by 2011. Every time people think they've missed it, every time they think it's gone up too much, it goes higher still because the underlying problems keep getting worse. And gold keeps doing what it's designed to do, which is protect wealth from currency debasement. Don't wait for a pullback that might never come or might be trivial compared to where gold is headed. Don't try to time the market. Don't speculate. Just get your insurance policy in place now while you still can at prices that are going to look cheap in retrospect. Because I'm telling you right now, 5 years from now, 10 years from now, you're going to look back at the opportunity to buy gold at $2,000 an ounce, and you're going to wish you had bought more. Just like people today wish they had bought more at 300 or 500 or 1,000. The time to buy insurance is before the disaster, not after. And the monetary disaster is already unfolding. Most people just haven't realized it yet.